Good morning, everyone. Can you guys hear me? Here we go. Good morning, everyone. I'm back. Sorry about that. Can you hear me? Oh boy. I'm telling you, this technology sometimes. I apologize, folks. Okay. All right. Let's get to work. All right. Welcome to Friday. And had a little damage here in the chart. We've got all of the inventory really from September is above us. And that's why we're having this selling pressure. Um, these markets are fragile, and because of all the news and the tariffs and things like that, a lot of people who run money are being cautious. That gives room for speculation, so there's really no bid support right now in the market. And what that means is no one's really coming in and buying a ton of anything, so we are just drifting lower. Now the good news about this is yesterday we did a look below and fail of 55.16, currently trading 55.57 right now. If we go and take a look, our overnight inventory is 100% long. And when inventory is 100% long, basically what it means is the market after a liquidation is acting in a normal fashion. What that means is the liquidating inventory taken in yesterday is being sold above yesterday's close. That's normal market behavior. Okay. If we had a lot of panic selling, the market would be trading underneath 55.10 and probably would have taken out 5500. We do have selling. It's rather orderly, right? It's a bit more volatile than we're used to. So trading RTH can be a little challenging, right? And that happens, right? So we're just going to have to adapt. We the sort of buy the dip, look below and fail traders, the traders who go long because there's no supply, have to manage their expectations now. So when you are going long, you have to sell into strength. You can't expect to make huge long trades. And when you're shorting, you have to be careful that you don't short in the hole. So inventory being long tonight means it's correcting already. For it to correct all the way down, it has to take out these levels here, and we'll show you these on the next more detailed chart. Here we are. You can see here's yesterday's close, and we are trading all above it. We've corrected inventory a little bit from that overnight high, and I do believe that's a poor high in the overnight. Yep. Oh no, it's 2 ticks. It's close. So we know the sellers started selling at 73, and then they price compete down to 67, down to 50, 55, 65 and a half. Right. That overnight point of control is now down here. And K, L, and M periods corrected inventory lower. Okay. So the price action looks okay. It's probably tradable. Let's go take a look. I've got my balance zones. And so first of all, we go and look at where the inventory is. It's above us, right? Then the second step is to go find balance zones on the 1 minute chart. Now, the 1 minute chart helps us execute trades. How do I put this? The 1 minute chart helps us execute trades that actually have a chance, right? Um, a lot of traders get into the trap when they're looking to trade and they have completely unrealistic expectations. Trading on a 1 minute chart helps you manage your expectations and make sure that they're realistic, right? So what I look for is I look for a high and a low. And for example, when we look below that low, we go back to that high, we go back to that low. So there's two-sided trade on both sides. Okay? So we found our balance 55.61 1/4 to 67, right? And you double it to the upside, you double it to the downside. Now let's double it and see what we get. Oh, look at that, right? That's just the first part of the double. So we got to the middle of the profit zone, and that's where the sellers stepped in, pretty much to the tick, right? What's our overnight high? 55.72 3/4, 72 3/4, right? Then we go and double it to our discount zone. And we did a little bit of a look below and fail of 61. So now we're going to test the zones to see how well they work. Yes, John, it's live. I know you haven't been around, so yeah, we changed things and we're doing stuff on YouTube now to sort of expand the room a little bit and bring more people in to our micro e futures room. Point of control moved up. What does that mean? So when a point of control moves higher, it means distribution is happening. When a point of control moves lower, it means accumulation is happening. It's not to trade off of, right? But it's to give us some sort of a clue as what's going on with the market. The market is a business. So if the point of control is moving higher, it means good distribution, right? We took this product here at 55, 58, 59, and now we're selling it at 63. This is how business is done, right? Wholesalers pick this up and sell it into the retail flow for profit. The L and the M low both hit the same place on that liquidation down. That means there's competitive buying at 55, 53. It's very simple, right? The analysis of a market shouldn't be 3 pages, right? You need to find where the buyers are. Why are the buyers down there? Because they're short underneath here, here, here. So they're front running 47, 46 by buying 53 because they averaged up in the middle of the night. This is just normal trading, right? So now let's see if we hold 55.61. The other thing that I have to do is I have to go and set VWAP, which I have not done. I think it's right here. Is the Globex open? Hey, Funk, what's going on? How you doing, brother? So we picked up a little position here underneath VWAP. Now we're retailing it out above VWAP, right? Accumulation, distribution, accumulation, distribution. What else is there, right? Why else would price move? You accumulate inventory, order flow comes in. Order flow is a very, very fancy way of saying customers, right? Customers come in the market and what do? We buy inventory from them or we sell inventory to them, right? Because it's a two-sided market. It's not just one way, right? We're not just selling all the time. Sometimes we have to flip over and buy, right? Not us, but wholesale, right? Why is that? Because they provide liquidity, right? Liquidity is the ability to transact size without adversely moving price, okay? And that is the most important thing that you really, really need to understand in your trading because it'll help you get some sort of situational awareness, right? So, would it be wise to short at the bottom of a discount zone? So, if this thing gets back down, like if it gets down to 55.49, 55.50, is that a good short? Probably not, right? Unless there's a lot of selling. What you'd be looking down there for is a look below and fail of 55.49. Now, if it keeps selling, of course, the short is valid. But in markets that are kind of slow and a little two-sided, right? And let's take a look at what happened yesterday. Yesterday, the market did a deep, deep dive down to 55.09. Then J period did a massive move up, right? That's that J low counter inventory trade that I like. It's at, I think, 2 p.m. Eastern time. And then, of course, we liquidated again in M period, which is the last half hour of the day. But look at where N period, which is that 4 to 4:30 and 4:30 to 5, it closed higher. So there are people short under 55.26. And if you notice where the overnight low is, it cannot take out the close or that low here in O period, right? I should have a stop there. So what happens is short-term short sellers who short down here, they help hold the market up at night and allow wholesalers who have to take in inventory to get rid of their inventory at a higher price, right? That's how business works. It's really simple. It's just a business. There's no mystery in this stuff, right? The mystery is that nobody understands what's going on or effectively communicates it, right? So that's what we attempt to do here, right? Yeah, K did not take the J overnight low. Yeah, I mean, we're nowhere near the J low. K period did take the J low, Phil. K, L, and M took the J low in the overnight correction, right? That's why we're just kind of farting around here underneath VWAP, right? I think you meant K did not take the J low in RTH, right? Sometimes what I'll do is I'll trade and I'll wait for that J low correction trade. I find that a really, really nice trade. Like I won't trade from about 11 o'clock to 2. And that is a nice trade to take. So now that we've got our balance zones, we see that they work. We just wait for our setup. Now this prevents FOMO, it prevents all that nonsense, right? Because I firmly believe that trading psychology should be used when you're trading, not afterwards. right? What's the use of having psychology if you can't make it work in a practical manner? How do you make it work in a practical manner? You use trading psychology alongside the business, right? So if you're making bad trading decisions, you don't need a psychologist. You need to understand what's going on in the business. So, for example, if you're trading here, right, you can see that the market is kind of going back and forth over VWAP. You can see that there are sellers right here at 61 half. So the look below and fail of 55.61 quarter isn't the greatest trade right now, right? If you're shorting, there are bids at VWAP. So there's not much wiggle room here, right? Between 59 and 61. So that is not an optimal place for you as a retail trader to do business, right? For here, when you are in between a seller and a buyer and the range is tight, that is a wholesale business because the wholesalers will just buy 100 on the bid, flip over and sell 100 on the offer and vice versa. Morning, folks who are joining us on YouTube. Yeah, sorry about that. I had a little technical issue, right? So now we lost the bid at VWAP. So now I know that the bids at VWAP aren't really that strong this morning, right? So when I sit down and I look at a market, I try and get some information about what's going on instead of just blindly trading a technical indicator or blindly trading uh, a moving average, right? You sit there and you kind of suss out what's going on. Okay, there's usually more buyers at VWAP, right? This 1 minute candle sliced right through it, right? So I was hesitant to short 60 and a half, 61 against that seller, right? Now I know that that seller has now moved lower, right? And if the seller is underneath VWAP, then we know that most probably we're going to come back down to this 56 level, right? And the overnight POC moves down again. So it's kind of bouncing back and forth, back and forth. See, there's a seller at VWAP because as soon as the offer got to VWAP, it got knocked down, right? When sellers compete, they offer in front of each other. So Phil goes to sell at 5, I go 499, Travis goes 498, Shaz goes 497, right? Raj will go 495, and then I'll go 494, and we hop each other on the way down because we want to be out of our inventory. We want to capture the buying, right? And that is something that retail doesn't get to experience is the experience of selling size, right? Size takes preference. Size moves the markets. People with the lowest cost basis are always ahead of those who have a higher cost basis. So if my cost basis is down in yesterday's, the lows of yesterday, then, right? If my cost basis is down here at 55.26, it doesn't matter if I sell it at 65 or at 58, I'm still in profit, right? Bit of a slow night. So there's not a lot of order flow, not a lot of customers, but you could see before I got on the stream that there was a little movement, right? 55.53 all the way to 55.64, back down to 57, up to 61. Right. So if you did take that short at 60.61, right, on the fact that there was competing sellers here and then they moved down here, right? You're going to put some bids here at 56 and see if you get a cover. I always like to bid ahead of the level to front run my levels. right? So if I'm short even 60, 59, right? If you don't have to short the absolute top. You're shorting the back end of the move because the seller is there and the sellers are moving the offers lower. Look, boom, boom, right? As long as that offer keeps moving lower, you're golden, right? Shorting is difficult because most people just short based on emotion or the fact that the market went up 30 points. But for retail, because we have limited capital, you have to be smart about shorting. You have to identify that there's a seller, right? There's no reason shorting a market unless sellers are competing. There's 55, 55 and a half to the tick. So we know the levels are working. That's nice, right? Nothing magical about it. It's just accumulation and distribution levels. Profit and loss zones. So now we are in the 2 times discount zone. London's opening. Let's see if we can get down to 49 and 3/4. Right? We took out that low by 1 tick. Pretty interesting. I still haven't taken a trade because it's nowhere near my setup. Right? If you were just coming in, right, you might take this as your balance, this area right here, right? If you're just starting up, that's a valid balance, right? So there could be just a rotation here between 53 and 59. Hey Raj, good morning. How you doing, brother? How's the coin of bitterness this morning? 82,187. I'm still waiting for my 72,000 buy on Bitcoin. I might not get it. Who knows? I'm still learning that market. So when it's the middle of a zone right here, I just leave it alone. I will tend to leave it alone. Let's see if we can get past the sellers at 58. Any questions? It's a little slow. No? Everybody started their weekend already? I get it. So if you just came in and started trading and you wanted to trade this area here, right? You would just do the look below and fail and then sell into strength as it comes up to VWAP, right? Yeah, I'm trying to get rid of this black rectangle at the bottom. Nobody's given me an answer on how to do it. YouTube thinks I have a webcam, even though I told it I don't. But really, what you want to be focusing on is that candle chart. We just use the TPO chart to tell us where the stops are on a half an hour level, where their inventory is, and whether there's a poor high, poor low, or single prints, right? The candle chart tells you that there's competitive buying at 55.53, right? And when there's competitive buying, what would you do if you were a seller? You just stop selling. So what happens is when the market gets down to 55.53, if the sellers, right, this is all software now, it's not human. So the software will sense that there are bids under 53. So as soon as you're a seller of size, you pull the offer up and you make the buyer chase price higher, right? If the buyers under 53, if they see large size selling come in, they will drop their buy orders down to 49. But as long as there's competitive buying at 53, the sellers will lift their offers, lift the prices that they are willing to sell at, right? Because that's just commerce. Now, I happen to know that the buyers under 53 are short sellers who are trying to cover, right? Because nobody really is putting a huge long position together at 4 o'clock in the morning in New York in a market that's in a downtrend. Like, think about it, right? So it's short sellers that are trying to cover. So now those buyers, they're fickle, right? I mean, they'd rather cover at 49 than at 53 or at 54 or 55. So as soon as they see, or as soon as their software senses large sell orders, you'll see the order book just thin out, right? It'll just part. And a large order, that's why you get those big red candles. Same thing, if people are too short and somebody drops a big buy order, you'll see that big green candle because the market reacts instantaneously to order flow. In the old days, you'd have to call, the broker would call the trader would put the order in, blah, 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 blah. In the time that it takes to do that in the old days, you can run 300 trades electronically. So that's why the order book is thin. That's why the order book is reactive. That's why the candles are larger. That's why the ranges are larger. Because this market reacts instantaneously. So the seller is here now. Do you see? So when it's slow like this and you want to learn, look at the candles to the left. And if they start lining up, the tops of them start lining up, that shows you where the seller initiates. They initiated there, there, and there. Do you care about how the computers are now possibly buying that we are down 10% off the highs? Where did you hear that, Travis? Travis, brother, the computers still have to, they, no matter, see, the computers just make the market more efficient, right? So, like, you're a welder, robot welding in a factory, right? Right, just makes your job more efficient, right? Instead of having a guy with a torch, right? They have robots that do the welding. So they speed the efficiency of the business. So algorithms and all of that stuff all they do is the business never changes. They make the market more efficient. Okay. So they still have to use business common sense, right? It's not a computer that goes, oh, it's 10% off, I'll buy some automatically. Because that tariff stuff is still up in the air. You see, people who run capital don't just automatically do things, right? They have to put a picture together, right? They have to have a thesis for why. And right now, all of that stuff keeps changing every day. So there may be buying now that we're 10% off the highs. Fund managers might start doing a little bottom fishing, but I have no idea. And how the hell does that affect my trading? It's just information that's clogging your brain, right? Remember what you said earlier, right? Remember what you said earlier about trading and over trading and all of those things. That's what you should be paying attention to. Does that make sense? Right? The best thing that you can do, right? The best thing that you can do is focus on where the inventory is and your setup and not to overtrade, right? Yeah, that I have no idea what the computers are doing. I have no idea what fund managers are doing right now, except I have a faint idea that they're trying to figure out what the hell to do. And because fund managers get paid a management fee, they get a management fee to not screw anything up, right? So you have $1 billion under management, 2% of that gets paid to you so you don't do anything stupid. So your expenses are covered. So it's not cowboys out there, right? They don't have to trade. They build an investment thesis based on macro things and all that sort of stuff. Does that make sense? So they're not like retail traders that are just like, shooting at anything, right? They make investments, they make the decisions by committee, right? But none of that really affects us, right? Yeah, just wait for your setup, man. Put everything else out there, right? I read the Wall Street Journal and Bloomberg for gossip. For me, that's like my People magazine. It tells me who works where, who got a raise, which fund is hot, just because I used to work in the industry, right? But it's just gossip. It doesn't help me at all when I'm trading, right? There's a look above and fail of that of 55.60. If you're trading the green box, that's what matters. You see? So where's the trade? The trade would have been, right? Instead of talking about computers, we should have been shorting 58, 59 against 60, looking for a 57, 56 cover. See what I'm talking about? All of that stuff takes you off track, right? This business is about focus, right? People miss everything because they have a 30-second attention span, right? Focus is everything. When I was running a deal, I would watch every single trade. And if a block printed and it wasn't me or if it wasn't my group, I would raise holy hell. I remember there was this one deal and they brought me in to help fix it because they said somebody is shorting it. This is back in like 1997, 98, before Reg SHO. So you could naked short. And they were pushing it down and pushing it down, right? And one day I was sitting at the desk, everybody had gone home after the close, and I saw a block of 300,000 shares print. And I was like, who the hell printed that? And I found one of the insiders was backdooring, selling behind everybody's back. And they made him buy it back. And you got to pay attention. How do the algos of the market compete with each other? It doesn't really matter, uh, Gherkin. I have no idea how the algos compete with each other and market makers. But the good thing is, it doesn't matter. If you want to make money, have a trade setup, manage your risk. How do you do business, Gherkin? It's all that stuff that people get all wrapped out about market makers, and most of that stuff is really old information. Algos, I have no idea. I've never programmed an algo in my life, right? Wouldn't know an algo if I tripped over one, right? Does that make sense? I mean, if you want to make a market, if you want to learn about market making, go get a job at Citadel or Virtue or one of those things. If you're a retail trader, focus on how to make money. Focus on your setup, focus on your risk management, focus on having good business habits, focus on making good business decisions. Does that make sense? I hope so. People waste a lot of time. Retail traders waste a lot of time looking at stuff that's not going to help them at all, right? Just keep it simple. Right now, they don't need to sell under VWAP, so we're in distribution. Look to see if we can take out the 64s because that's where the sellers were there before. You guys understand what I'm saying? Can I get a yes from someone, or do I need to switch to speaking French? Bueller, exactly. Right? Just focus on your business, man. Handle your business. Handle your business, right? Don't worry about everybody else and what everybody else is doing, right? At the end of the day, right? Well, it's good to know how it works, RS Trader. You buy some cheap crap, you sell it at a profit. When nobody wants to buy it, you put it on sale. There. That's the financial industry. Now, let's get to your setup, your risk management, and doing the same trade 500, 1,000 times so you can work out the subtleties of it. It's the boring stuff that makes you money, right? Right? People just, they're worried about what the market makers are doing and what the algos are doing. And are you managing $2 billion? No, then don't worry about it. And if you are managing $2 billion, you're not asking those questions. I really hope, right? We're retail traders, right? We got to handle our business. Took out that 64 seller. Let's see if they relent or they come back. Everybody's struggle is proper risk and trade management. Squirrely, nobody jumps out of the womb with natural trading ability. I've never seen anybody in 33 years, hundreds of deals, thousands of people that I've met who've just been able to sit down, trade, and make money. I have never seen that. Never. I've seen people get lucky. Yeah, getting overconfident just means you're not treating it like work. Like if you were a baker, do you get overconfident and start over baking? If you were a surgeon, do you get overconfident and start doing surgery just for the hell of it? Right? And then do you do revenge surgery or revenge baking? If you think about things and say them out loud, you'll realize how ridiculous it sounds, right? That's another thing because we work retail, you don't have anybody to check things against. Try saying stuff out loud, right? Say it out loud. I do it all the time. I'll go, I'm short biased, right? If I'm short biased, then I look at the chart and go, yeah, crap, I'm wrong. But if you don't say it out loud, you just internalize these thoughts and you think, oh, that's a great idea, right? Let's all jump off this building together. Woohoo, right? When you say it out loud, You're like, what the hell did I, what, you know? Say it out loud. Oh, I made $1,000. Now I'm going to give it all back. Oh, I'm taking trades just for the fun of it, just to see if it works. Oh, and I'm angry and I'm trading, right? Say it out loud. When you say it out loud, you realize how ridiculous you sound. I'm not immune. I say things out loud all the time. It's like, oh, this happened or that happened, or I'll say, look, I'm trading like crap, or I'm half asleep. I shouldn't be trading. Stop trading. When you sit on a trade desk, especially if you're new, you sit next to the head trader or they have somebody training you. And if you go to do something stupid, they hit you in the head. They're like, what the F are you doing? We don't have that. So we have to do it ourselves. We have to police ourselves. We have to be our own compliance and credit officer, right? So you don't make stupid decisions. We're human beings. So especially if you get into that thing where you're like a dog chasing its tail in your head, you never stop and actually realize how ridiculous you are being in business, right? There's no such thing as FOMO baking. There's no such thing as FOMO plastic surgery. Here, let's just do this for someone because we're bored, right? Let's do a nose job. What the hell, right? I feel like doing some heart surgery, right? It just sounds ridiculous, right? It's because we don't treat it like a business. That's all it is, right? And how could you if you've never worked in the business, right? You're given a chart, you put some cash in there, and bing, 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 off you go. So what are we doing now? We're taking this that we bought between 53 and 59, and we're going to go and we're going to sell it up here between 59, 55, 59, and 55.66, right? This is distribution. So if I was redrawing these balance zones, right? There's my cost basis. This is distribution, and you double it to see that, hey, 72, right? So accumulation, distribution, right? When nobody wants to buy your crap, sell it back down, right? Very simple. Is it easy? Dear God, no, right? Because one week you're trading like a god, the next week you're trading like a chump because the agenda of the market changes. And what you were doing doesn't work. So you have to adapt. Learning how to adapt takes time, right? So you have to look at retail trading like a marathon, right? Yeah, and when it's volatile, you definitely have to size down and trade less. And take the time to sit and watch. We have limited bullets, right? Everybody else is out there, institutions are out there with like heavy artillery. You're out there with a plastic spoon. Hell, you don't even have a plastic knife. Yeah, exactly. The agenda has been changing every 3 hours this past couple of weeks. It's like trying to hit a moving target all the time. You're moving, the target's moving, right? That's why big institutional money is kind of sitting there going, right? This market has to digest everything that's coming out of that gentleman's mouth, right? Yeah, and a tweet causes chaos. I mean, his first term was even worse because the algos had no shock absorbers. At least now they've got some shock absorbers in those algos. Yeah, 2016 was my God. Yeah, it'll settle in. It'll settle in. We're naturally as human beings, we are we're impatient, right? And I get that, right? We're impatient, then we get greedy, then we get scared. Managing those emotions when your money is at stake is very difficult. That's why you have to have a method, right? Where you're like a pilot. When you hit turbulence, you automatically do things. You're trained to do things. So here we're trained to get into a trade, we're trained to get out of a trade. You train yourself, right? I've been doing a little too much preaching today. I apologize. I haven't really called out any trades. I should have been calling out that long from 61 to 67. No revenge stitches from the doctor, Travis? Could my system be made with another type of bars? I would imagine it could because it's all inventory, DJ Trader. Hey, Doc, what are you doing there? The Discord is still open. Ah, morning shift. Cool. Yeah, now I use candles because frankly, I don't have any experience with any other kind of chart. And I can't teach what I don't know. So somebody was talking about 5,000 contract bars and what is that? Bunko charts? No, Renko charts. And what was the other one? Itchy and scratchy or some kind of I don't know. I've never used it, but I'm sure I'm sure it'll work. It's just inventory, right? You guys have way too many tools as retail traders, right? How would you like to trade using a piece of paper and a golf pencil and somebody marking prices on a board every 15 minutes? Now go trade. The link is in Discord. Just scroll up. I'll put it in there again. We're almost done here, DJ Trader. And if you subscribe to my page, now I sound like one of those young kids, you'll get the notification. Let's see if this new balance zone works. Let's see if we top out at 72 and a three quarters. Just curious. Now, if we take out that existing overnight high, the short sellers are going to be using that as a stop. So it will create some buying. If we trigger 73 quarters, 73 half, 73 three quarters, 74, there will be buy stops there from short sellers. Now, a savvy wholesale trader who's long, say you're long 62 to 66, I'd be like plugging every bid here at 70 like no man's. I'd just be like in the old days, hey JJ, can I show you a bid? And before they even say bid, I'm like, sold. I didn't tell you how much I want to buy. Sold, 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 sold. Right? You gotta turn that inventory into cash. Right? As my buddy Buckwheat would say, you gotta turn it into cash. Right? That's the goal of business. Take the inventory, turn it into cash, buy more inventory, turn it into cash. Sometimes you got to put it on sale, right? That's life, right? But you've got to turn your inventory into cash. That is why it's called a market, not a hot tub. Picture in picture. Thanks, John. Now, guys, in my coaching class, there will be no one-on-ones from 9 a.m. UK time to noon because they're doing some work in my building and I will not have power or internet. So I'll post that in the room. I hope the elevators work. Otherwise, I'll be walking up 20 flights of stairs. That's it for me this morning, folks. Now, please come join us at microefutures.com. We do have a 7-day free trial. I promise you, you will learn more in 7 days with us than you will anywhere else. And our whole system of trading is based on practical trades. It's Friday. We'll see you in the RTH session at 9 o'clock Eastern time. And please be safe out there. Remember, Friday is about keeping all the money that you made this week. If you didn't make any money this week, don't push it on Fridays because that's how people blow up accounts, right? Save your money. Be like a stingy old man. Okay? Remember, do not take candy from strange market makers. All right, folks. Have a great morning. We'll see you in a few hours. Bye for now. Thank you.